Namaste and welcome back to our channel. Let's dive straight into the market update for 24th March 2025. Before that, we will also discuss about what moved the markets last week and what you should be watching out for. So our markets experienced a significant rally with both the Nifty 50 and BSE Sensex recording substantial weekly gains. Nifty rose up by around 1000 points, translating to 4.5%, and Sensex rose around 3000 points, translating to 4.15%. There was also a broad market participation that was observed, with mid cap and small cap indices outperforming the frontline indices. Mid caps rose up by 7.5% and small caps up by around 8%. Now, a strengthening Indian rupee supported by FII inflows and RBI interventions boosted market confidence. Presently, USD INR is trading below 86, which is a good sign. We also saw there was a strong buying activity by domestic institutional investors and foreign institutional investors, which helped providing market support. DIIs last week pumped in around 3,832 crores and FIIs had a net inflow of 6,600 crores. Now, there are also expectations of a stable inflation outlook, which could allow RBI cut rates in the future. This could also help the market sentiment. Since inflation is well below the 4% expected inflation rate mark from the RBI. Retail inflation is below 3.6% and wholesale inflation is much below or equivalent to 2.4%. Lastly, there is a market speculation about a potential RBI rate cut following the US Federal Reserve's rate cut guidance, which also fueled investor optimism. Now, these all points helped market to rally. Now, let's understand what is the outlook for the coming week and where the market is expected to move. Now, let's jump onto the Nifty 50 index. Now, last week we saw continuously 5 big candles were formed, and each of the day's candle opened gap up and sustained, further opened gap up and sustained, and this might continue even this week. However, there are multiple factors that we have to take into consideration. One, we are in the month of March, which is a closing year. So majority of the traders, be it proprietary traders, FIIs, DIIs, will have to close the books of accounts. And for this purpose, there could be a lot of volatility because they would be trading into their accounts, either liquidating for the income tax calculations, for the close of the year valuations. So we can expect a lot of volume. Now in that volume, there are high possibilities that there could be a sell-off that can come up, or the momentum of continuous buying could continue. We also have monthly or maybe weekly expiry for Sensex, and also on Thursday for all the indices on NSE exchange. So there are high possibilities that the market is expected to be volatile and it could have wild moves. But can we expect the market to come below these levels of 22,150? Maybe doubtful. If that comes, then that would be considered as a alert. Simply because we might consider that the rally that had happened from here till here had fade out. So as you could see here, previously we had marked, so there was continuous rally, and then when the markets reversed, so this gave a big move, roughly around 5-6% move, and then there was a consolidation. Further, when it started falling, another 7 to 8% move this gave. So we have chalked or marked these horizontal lines to understand until when this um, rally is expected to continue, and when there would be a turnaround or a reversal from whatever those levels are, that would give us a better opportunity to further enter into the markets for taking short positions, or be in a wait and watch mode to understand if there is a possible reversal that is happening. So now we have simply marked this horizontal line to ensure that this is the line where the markets had maybe uh, put a low, right, the previous day's low. Now if the market closes, the next day's market, that is 24th closing, happens below this, then that would be the first sign or a signal. But we have to wait and watch how the nifty or maybe the overall indices are expected to perform. Now let's understand from the option chain as to where do we have supports and resistances. So now if you could see, the PCR stands at 1.1, which is okay, or maybe decent we can call, right? Now if you see at each of the call positions, so there have been a change in the open interest. So people have been liquidating the positions at 23,000 levels. Typically the call option writers have been liquidating the positions because they might not seem to be confident. So here you could see, here you could see, here you could see, here you could see. However, for the far strikes on the call options, you could see that there have been additions in the open interest. So this, and small additions we could also see. When we look at the put options, we see strong support coming in around 23,000, and then the next further support is at 22,800. The further next support is at 22,500. So there are strong supports for Nifty until like 23,000 and all, and even this two strong supports we could also see, right? So we have to wait and watch only next week to understand how the market is going to react at these support levels or support zones, and if the market opens gap up or moves forward, how these levels of 23,500 would act as a resistance. If that gets taken out, then we do not have any other resistance, strong resistance, except for 24,000. Next, we will talk about Sensex. Sensex had also seen similar rally. All the 5 days, the market was positive. It opened, gap up, sustained. It opened again, gap up, sustained. Further, there was a gap up and it sustained. So there were continuous 5 or maybe 4 green candles, which shows a strong buying from the foreign institutional investors, because we already saw last week they were net buyers. So this rally is expected to further continue. Now until when it continues, we have to see. We have to mark similar vertical or maybe horizontal lines on closing basis to understand how and until when this rally is expected to continue. So let's see from the perspective of option chain how Sensex is expected to perform next week. Now the PCR again is at 1.1, which is decent. Now if you could see on 77,000 levels, there is a strong resistance. There has been a change in open interest on the um, call options too. However, we have to see if on Monday or maybe on the weekly expiry day, how this option chain is going to look like, because if you see at 75,000 we have humongous support and increased OI2 roughly around 60% of the open interest has only come at 75,000 levels, right? And then here again 75,500 levels we saw huge open interest additions happening. Similarly at 76,000 further we saw open interest addition of roughly around 2 lakhs had happened. But if you look from the perspective of call options, so open interest additions only happened for far out of the money options. So if you could see here there was and slight open interest here on the call options. So what this translates? This translates that people are bullish and they do not want to take up or add any further calls at closer at the money levels, because there are high possibilities that because of huge buying from the FIIs and DIIs could propel them to liquidate, right? And market, if it starts crossing like 7,000 levels on a decisive note or basis, then we can expect the markets to further rally to 77,400 levels, then to 77,700 levels too, because the strong support only the strong resistance only emerges around 78,000 levels. Now let's see from the perspective of bank nifty. Now banking stocks compared to nifty and sensex has performed really well. So there have been a strong buying that has been seen. So from the overall 52-week high, we are just sitting roughly around 8% below. Whereas for Nifty or Sensex, we are still from 52-week high trading around 11% down. So there is some buying momentum that is seen in the financial stocks. And we have to closely watch how the overall banking sector looks and what are buying opportunities that can emerge. Now, the primary reason could be because there was a lot of bashing on the IT stocks. There were short positions that were taken continuously last week in the IT stocks, and somewhere to have a sector rotation, we could see that there was huge momentum that was seen in the banking stocks that were bought. Typically the big major banks like ICICI, SBI, and then Axis Bank, and of course Kotak, need not to forget. Kotak had seen a good rally altogether. So in the future or maybe next week too, we might see more maybe buying expected in the bank nifty. But the expiry is there. That is one thing that we have to take into consideration. And second is there is a strong resistance at this level. So we are tad close to the same level, and we have to see if market it opens gap up above this level and sustains. If it sustains, then there is further resistance here, which can act as a strong resistance for a further sell off. Or maybe if the market consolidates, then we expect that there is a strong buying still expected, and the market further is expected to rally upwards. Let's see from the option chain how this is expected for next week for the bank nifty to perform. Now on the lower levels, if you see, we have been seeing strong support from the put side. So at 49,000 levels we have a strong support. At even 50,000 levels it is okay sort of support, because there was a change in open AI on the call options. So if you see the near call options have been, we have been seeing that there is change in the open interest, and the call option writers or buyers are cutting down on their positions. So people are worried that if the market rallies or moves one way, there are high possibilities that all these people are bound to face losses, right? So we have to wait and watch and see how the market is expected to perform. 52,000 seems to be difficult. That is when there is addition that we had seen. But yeah, since there is a strong momentum, any rally could definitely be not that difficult for 4 days for the market expiry to take down around 1500 points, right? But yes, we have to wait and watch and understand how that is expected to take out maybe next week. Now last is FINNIFTY. So now if you see from the 52-week high, FINNIFTY is just 4.5 to 5% down. So as I already told that in the financial stocks we are seeing a huge buying momentum. So this is a sector that we have to closely track. Can we expect markets to close above these levels next week? Maybe it's just hardly 1 to 2%, and possibilities are quite high given the strong buying momentum that we had seen here. Roughly around 5 candles, every candle opened gap up and it sustained. So there is high possibility that next week too market can open gap up, and at these levels if it sustains, then we will surely be seeing, at least in FINNIFTY, it would be breaking the 52-week high. Is that going to happen immediately next week? We do not have an idea. But looking at the buying momentum, there are high possibilities. If the buying continues, if the inflows from the FII continues, if DIIs do not sell more, when FIIs are buying, we can definitely see a rally to continue and we breaking the 52-week high on FINNIFTY at least. So take a look at all the stocks which are doing really well at the uh, FINNIFTY level index. So now let's understand from the perspective of OpenAI. So here we could see that at 25,000 levels there is a strong resistance, and then even at 24,600 we could see a strong resistance. On the support side, so we have small supports, but 24,500 calls. If this further there will be open interest additions seen, then we can expect that there could further be additions next week or at 24,400 levels, 24,300 levels. So we have to see from the perspective of option chain data. uh, we are not so bullish, but looking alone at the chart and the candles, what we had seen, it emerges to be seen that there are high possibilities that FINNIFTY could break out and cross its 52-week high. But yes, time will only tell us where the markets is expected to move in the coming week. But yes, with every day's closing, we have to closely watch and understand the market behavior to ensure that we trade on the right side, because the volatility is surely going to be quite high because all the NSE indices has an expiry and will be expiring on Thursday. So until Thursday, expect a huge volatility to be there, and consider these as a strong support zones, because FINNIFTY indice may not break these levels. Now from the perspective of FII, DII data and the investments. So now from the perspective of FIIs in futures, they are short. So looking at last week or maybe previous day they had cut down further shorts. So that means that FIIs are bullish. From the future data on the stock futures, they are already long 17.24 lakhs, which is huge. That means they are quite bullish. On the index options, so on call options, they are long, which means they are, quite bullish. On the put options, they are again long. And if you see, there is only roughly around 30,000, 32,000 difference. So with this data of OI, it doesn't give a lot of confidence on if the FIIs are going to continue with their long positions. So we have to wait and watch to understand what kind of moves that would come in maybe on Monday and further on Tuesday when we have Sensex expiry. If there is going to be a sell off by FIIs or if they continue buying further. Now looking at proprietary traders, they again cut down their positions. They were short in the futures, but now they are less short, so that is a positive sign. On stock futures they are mildly bullish, which is okay. On index options, so they are long on call options and they are short on put options, so which very clearly shows that proprietary traders are quite bullish for next week. Looking at the clients or retailers, on index futures they are long, on stock futures again they are long, but on index options they are decisively short. So if retailers are bearish, we can expect that the markets is expected to move up given the fact that FIIs are also long, proprietary traders are also long. Now on the put OI, put options OI, this is not that significant. So majorly clients or retailers are bearish, and that is the worrisome sign. Now looking at the FIIs and DIIs cash data. So FIIs were hugely bullish and they had made investments in cash to the extent of 7,470 crores, whereas DIIs roughly soared around 3,200 crores. So there is a net buy of around 4,000 crores between FIIs and DIIs. And since we already discussed and told that FIIs seems to be bullish, but alone looking at this data, we have to wait and watch and see how the market is expected to perform next week based on this OI data. So that's it from the perspective of market outlook for the next week. We will closely track on the each day's closing basis how the market is performing and accordingly take the positions. So until then, thank you. Happy trading.